Yes, we think so. So Tankan out last month, very positive, 5%, or Shunto out, I should say, last month with a positive 5% growth in wages. And as you say, as you just mentioned, absolutely crucially, first signs of SME wage growth. So this broadening, absolutely essential to the Japan macro story, is beginning to be seen, and I think you'll see it play out in the months and quarters ahead.
I wanted to also ask you about a little bit about the politics in terms of a potential Trump 2.0 and what that means for Japanese markets, because we did see these reports about the former Prime Minister wanting to get a meeting with Donald Trump, and there was sort of, at first I think there was sort of some hesitation, but that meeting did actually happen. But given some of his plans in terms of tariffs, what do you think that means for Japanese corporates?
So politics, definitely not my area of focus. I still think from a geopolitical perspective, Japan is well placed globally currently. I would expect some horse trading in and around tariffs, but at the end of the day, I think Japan, along with Southeast Asia, India, from a geopolitical perspective, I expect to be well placed no matter who comes into the White House later this year.
How are you looking at Japanese assets right now across the board, CJ, in terms of the attraction there is in investing in bonds versus equities, also the currency? What people don't realize is that while the currency is falling, it's an excellent entry point if you want to catch the upside for equities or for bonds, given that it's so cheap right now.
Completely agree. We remain structurally very bullish about the Japanese equity story in particular. Last time we talked about reform, corporate share buybacks, disposal of non-core assets. What people forget, I think, in this Japan story is growth. This is as much a growth story in some respects as it is a reform story. So first quarter earnings growth up 22%. Some great numbers last week. Department stores, same store sales growth up 17 to 20% for the two big guys. Land prices rising in Tokyo for the first time post-COVID, or continue to rise, I should say. So we remain structurally bullish. The equity market in particular, foreigners buyers so far this year, 6 trillion yen, but that comes predominantly from Europe. US institutions yet really to start allocating to Japan. We know that Japanese corporates are buying back their shares. We know that retail in Japan is buying stocks. So we remain structurally bullish, the equity market in particular.